from you. Let's move on. Federal Bank has just reported numbers. The performance, let me quickly take our viewers through the same. Net interest income has grown 6%. PAT is up 30% for Federal Bank as far as first quarter is concerned. The net interest income is below expectations, whereas the PAT is in line with expectations. We have with us the management, Mr. Shyam Srinivasan, the MD and CEO at Federal Bank, joins us from Kochi. Sir, thank you so much for taking time out to talk to us. Give us a sense on the asset quality, sir. That's the first thing that the street wants to know. How has asset quality shaped up? As far as net NPAs are concerned, there's been no growth as such. So on a quarter-on-quarter basis, however, the NPAs have gone up. The net NPAs is what I'm talking about. How is asset quality holding up right now? Okay, we don't have the management. We'll try and re-establish contact with the management of Federal Bank. In the meanwhile, let me quickly take our viewers through the performance of Federal Bank. NIA growth is up at about 7%, which is slightly below expectations, whereas the PAT growth has been more or less in line with expectations as far as Federal Bank is concerned. Gross NPAs are up 8% quarter on quarter. Net NPAs are up 19% on a Q-on-Q basis. So obviously there is some pressure building up on the asset quality front. Provisioning has come down by 53% year on year for Federal Bank. So that's heartening to see. Other income, however, is up 6%. The operating expenses have gone up by 21%. So what's the reason behind this gain in the operating performance? Let's ask the management. We have with us Mr. Shyam Srinivasan. So thank you so much for joining us. If you can hear me, Ashutosh this side from the Delhi studios of NDTV. The net NPA levels have gone up. However, provisioning is down 53% year on year. Can you give us a sense how is the asset quality holding up right now?
Yeah, the asset quality broadly is okay. On the large corporate or rather the mid-sized clients where exposures are greater than 50 crores, there are a few accounts that we are watching closely. In the quarter that went by, we had one large account in the pharmaceutical sector which we had to recognize as NPA. We're working with that. We believe in coming quarters that could correct, but we've recognized it as an NPA. Barring that, we have not had any stress. If you notice, our retail and SME have actually, the slippage has halved compared to the same quarter last year. So broadly, asset quality okay. There are pockets of stress in large corporates. When I say large corporate, I mean the mid-market kind of clients.
Is there a trend to this? I'm trying to find out if any particular sectors are witnessing pressure, or is it a company-wise problem that you're witnessing right now?
We haven't seen any significant sector-related stress because we fairly broad-based and diversified. But one characteristic is those clients who have had higher leverage are facing stress, and so if you are part of a consortium and have extended credit, say anybody who's borrowed 600 to 800 crores and we have 40-50 crores there, we're seeing some stress.
Can you give us a sense, sir, the restructuring that has happened in the quarter? What is the exact number? Secondly, let me also get your Please go ahead, sir.
The restructuring this quarter was about 200 crores. One was a power sector company of 80 crores and the other is a construction company of 40. That comes up to 120 crores. And the balance is the regular routine small ticket restructuring.
Right. On that note, I also want to ask you if that restructuring, what about the Rajasthan SCBA? Has that account been restructured? What is the total exposure that you have to the state electricity boards?
Rajasthan Electricity Board, you may recall, in last quarter of last financial year, we had already restructured it. The only other large electricity board exposure is Tamil Nadu, where we have about 200 crores, which we are working with them, and we have to see how it plays out in the coming quarter.
If we do see a tariff hike coming in, do you think that asset quality could perhaps improve?
Tamil Nadu has already raised tariff. Effective April, they have raised tariff. That has reduced the burden, but they do have some outstandings that they have to sort out. And I believe that there will be a conversation of some kind of restructuring going on. We haven't had the final details as yet.
Right. So just one quick question before I let you go. The RBI policy just concluded 2 days back. What's your take? And secondly, the banks across the board have started to tinker with the deposit rates. Any probability of Federal Bank also hiking or slashing deposit rates?
Ours is more a tactical measure. We have increased one tenor deposits to attract because we have a special offer going because our 1000th branch launch is on the 17th of August. So as a recognition of that, for 15 days we have a special offer on deposits. by which time I think we'll have a better sense of liquidity and then take a decision on overall rates in both deposits and advances.
All right, sir. We leave it at that. Great to get those thoughts from you. Thank you so much for joining us. Always a pleasure having you with us on Profit. Federal Bank results. The stock is up, doing quite well. With that, we wrap up this edition of Market Check. Stay with us. Coming up next, trading derivatives. Devina takes over.